Kim, thank you so much for being with us today. Everybody, I want to introduce Kim Davis. Kim is with RCN Capital, and just so glad to have somebody from RCN on our call today. RCN is hands down one of the best fix and flip lenders out there, and they also have a really strong DSCR product. So Kim, I'm going to let you share your screen, and you can get started with your presentation. Okay. Oh, and Kim, before you get started, if you don't mind introducing yourself, giving us kind of like a rundown of where you come from, and how, like, best way to contact you, that'd be great. And by the way, everyone, today's date is April 26, 2023. Very important when we're talking to lenders to note the date, because things do change. You know, interest rates go up and down and policies change. So that is today's date. Take note.
All right, let me know when you can see my screen, or if you can see any of my screens.
Sure. There we go. We can see your screen now.
Perfect. Okay. RCN, we began 2010, and we started with our fix and flip loans. And at the time, we actually had an owner that was using his own funds to actually fund our loans. And we got to the point where we grew really big, really fast. And so we ended up having unlimited funds from our financial partners. And so it's kind of unlimited right now. We've grown tremendously. I'm one of the first employees at RCN. I started off as a loan processor and grew within my position to become a loan officer. And I've been with the company for about 8 years now. I am a senior loan officer here at RCN, and kind of gives me the advantage of having, firsthand knowledge of the beginnings and where we are now. So it's been great to watch our company grow. So our programs that we have here, the first slide is going to be our short term, which is our fix and flip loan. It's also called the Bridge. With our fix and flip program, right now, we lend up to 85%. Our beginning credit score will be a 620, and we lend based on credit score and experience.
Excuse me.
Yes?
I'm not seeing the screen. I'm just seeing I'm not seeing the screen. I just got a black.
Oh, really?
It does say I'm seeing your screen, but I'm not seeing it.
It does say that I'm sharing.
Oh, Jeff, sorry. Is it still black?
John, do you see my screen?
Yeah, I see your screen.
Okay.
Yeah, that's fine. I would say keep presenting. I have it on record, Jeff. So why don't you just listen, I guess, take notes. And on the recording, when I post it, you'll see what she's talking about. So sorry you can't see it, but I can see it on my end. So I'm not sure what's going on. Maybe it's a local issue. But I will I'll post the recording so you can see everything.
I'll also send you an email right now. How many people are on the call right now?
It's just you, me, and Jeff. But this will go on a recording, which will go out to about 44 of our brokers.
Wonderful.
So it's best to probably stay out of the minutiae of things if we can. Jeff, let's just hold off on questions maybe till the end when she's done. And so we can kind of focus on the presentation of the product.
Okay.
I'm good.
Okay. And John, you still see my screen?
Yeah, I can see your screen. I see the recording. Jeff, I don't know what's going on, brother.
Okay.
Okay, no, y'all go ahead. Go ahead.
So starting with our fix and flip product, it is our 12-month bridge loan. With that bridge loan, you can also do rehab. In terms of lending, it's a 12-month loan, interest only. We lend up to 85% of the purchase price, and we provide 100% of the rehab funds delivered in construction draws. How that works is an inspector is going to go out to the property and verify what's been completed. Once that's been verified, we'll wire the funds to the borrower. It's up to the borrower to kind of set up how many draws that are needed. For a single family, it's going to cost $199 for each time we take a draw. And what I can do, I can also send you guys information separately regarding the draw process. And I think that's really important for every broker, everyone to have, because a lot of the questions that borrowers have, they're going to reach back out to you. They're not going to reach out to me. So it's really important to know about the draw and how they're going to get their funds.
Yeah, post presentation, send me all the apps and everything that you want our brokers to use when they're brokering your loans. I'll attach it to your conference.
Absolutely. And the tear sheet that I have here, and I'm hoping that you see this right here. This is our short-term loan program. Is that what you're looking at, John?
Yep.
Okay, perfect. All right. And so when I do provide these tear sheets, it's going to tell you what our minimum FICOs are. It's going to tell you the loan term, our minimum loan amount. So it's going to give you all the basic information that you need. There's a little more nuances as to the guidelines, but as you start to work with RCN and every borrower is different, you'll start to really get a great knowledge of our loan.
Actually, Kim, right now, I'm so sorry for interrupting. Right now, what I'm seeing is current loan sizer guidelines with a few links and specific loan documents with a few links. There we go. That's better.
Great. Thank you. Because when he wasn't seeing the screen, I did switch over. But that is another program that I was going to kind of get into as well. Okay. All right. So these are our lending programs with our bridge loan. And you can just take a glance. I'm not going to go over each and every detail, but this is some information that you can provide to your brokers. We also do white labeling with our marketing team, so you can get your own tier sheets, and everyone will have their name, so all their contact information on these sheets with your logo. That's something that we can do for you as well. We also have our long-term. This has been a really, really popular loan for us. We've been doing this for about 3 years now. This is our DSCR loan. It's our biggest product right now. It's really hot. I want to say 90% of my loans right now are DSCR loans. Very little fix and flips. I want to say good 10%. And I think across the board with all the loan officers, it really has been a really big product for us. It is a 30-year fixed rate loan. It comes with prepayment penalty options. The longer you're in a prepayment penalty, the better the terms of your loan. Example would be a 5-year prepayment penalty, meaning that you can't sell, refinance, pay down without a penalty. The first year for the 5-year would be 5%, then 5, 4, 3, 2, 1. The 6-year, you can finance, you can get out of the loan. Any questions so far?
Yeah, I have a question. What is the debt service requirement on single family, multifamily deals?
Our debt coverage ratio is going to be 1.1.
1 point. Is that for both multifamily and single family?
That's for both. In terms of foreign, yes, in terms of foreign nationals, it's going to be 1.2.
Gotcha.
We also have requirements based on credit scores. And what I can do, I can send you the grid and show you the grid.
Sure.
In terms of what that difference would be.
Sure.
Okay. We begin with a 680 credit score on this product. The better the credit, the better the terms. Full pricing for an 80% purchase price is going to begin at a 740 credit score. We begin with a 680. 680, you're going to have a lesser LTV. The next tier would be 720 and then 740 full pricing. So 80% on a purchase, 75% on a cash out, 80% on a rate and term. Interest rates right now have come down a little bit. Towards the beginning of the year, they were climbing towards 9%. I've seen a lot of 9s and 8s. Right now, we're in the mid sixes, so that's pretty great right now. I actually, if you buy down on some of the LTVs, if you do a lesser LTV, say a 60 or 55 LTV, and you're doing a cash out, you might be able to touch a 5, like a 5.9, but that's really great to see. I don't know where we're going to land, but I think we're really in a comfortable spot where it's actually bringing investors back now.
Mhm.
So with the prepayment penalties, I want to go back to that. There are lesser options. So with the prepayment penalty, we also have something called the straight 5s. I'm calling it the 5 straight, meaning that it's 5-year prepayment penalty all 5 years. So 5% the first, the second, the third, the fourth, the fifth. What that allows borrowers is a very much lower interest rate. So that's been a really great option that we just added on as a product.
Mm-hmm.
So with a 5-year prepayment penalty, there's also the choice of doing a 4, a 3, 2, or a no prepayment penalty. And if you do choose a lesser prepayment penalty option, you potentially will have a lesser LTV and you will have to pay additional points if you choose a no prepayment penalty option. Any questions?
Nope.
Perfect. Okay.
Actually, you know what? Here's a question for you, Kim. You were mentioning white label products. Tell me a little bit more about what it looks like to white label with you guys. Is it just the term sheet at the beginning, or can we even fund in our own brokerage's name? Tell our brokers a little bit about that.
We have a corresponding lending program. So if you become a correspondent lender with RCN, all of your documentation will be white labeled. Your borrowers will not know that they're going to RCN direct. In terms of having you fund in your own name, we don't allow that. I know there's been a lot of conversation, but on the commitment letter, your name will be on the commitment letter. On the loan docs, it will say commercial lender. So whenever you're communicating with your borrower, it's always important to let them know that commercial lender, you are a commercial lender. That is your loan platform. But when they do get that commitment letter, you will be on the commitment letter as the lender.
Nice. Very nice. Thank you so much for sharing that.
And when you do become a correspondent, you have access to this platform. And this is our Bridge Loan Network. Bridge Loan Network is the network of where we originate our loans. And so these are our guidelines. So you have access to all of our guidelines, our pricing tools, our documentation. So there's never any question of what to do with the loan because we leave everything up to you to be able to provide all this documentation. So you're going to know about the guidelines. Of course, you're going to have questions for me, but you're going to have full access. You're going to have just as much access to our guidelines as I do.
Is there an experience requirement to become a correspondent lender?
In order to become a correspondent with me, at minimum, I would like for us to be doing at least 5 loans a month, steady.
5 loans a month. Okay, got it.
Yeah.
And is there any responsibility guidelines beyond just a regular broker? Like, is there a difference between brokering a loan and corresponding a loan, or is it generally the process is pretty much the same? Any more responsibility or liability to our brokers?
I rely on my correspondents to have a lot more responsibility. They're not relying on me to price out their loans. You'll have full access to our loan sizer. And I'll just pull that up. This is how we price out our loans. It's going to come up as a spreadsheet. So this is our spreadsheet that we use to price out all our loans. So brokers that I have like a really good relationship with and I'm closing multiple deals with and they feel comfortable pricing out their loans, I provide them the loan sizer. We also have a loan calculator within Bridge Loan Network that brokers have access to. And they can download a sizer there as well. And most of the brokers that I work with that have a loan forgiveness, that's what they'll do. They'll do a loan calculator, do a loan sizer, and they'll provide it to you. And they'll let me know this is the pricing on the loan. Okay. So as a correspondent, I expect you to fully price out your loans. We have a good book of business. You know, my best correspondent, I closed 20 loans a month with him, which is pretty good. I do have correspondents that, talk a good game. Yeah, I got all this business, Kim. I'm going to send it over to you. I talk to them every other month.
Yep.
So it's important because, like, at one time I had about 30 correspondents, and I don't have time to kind of follow up on 30 people that are not sending me business. I'd rather focus on the people that are actually doing business, that are actually doing the work. For a lot of brokers, unfortunately, this is a tough business, and it just ends up being a side hustle.
Mm-hmm.
So as a correspondent, there are certain things that I expect from my correspondents. They're going to be dealing with their borrowers directly. They're never going to communicate with me. They're always going to be communicating with their borrower. They're going to make sure that we get credit and background authorizations, we get all the documentation. They're going to do preliminary setup in the bridge loan network for all of their loans. So when they send loans over to me, to go, I know it's a live deal and we're ready. They've already communicated with the borrower. They have all the borrower's documentation and we're ready to go. So it is a very important relationship. It's probably my most important relationships are with my correspondents because they are a bulk of my business.
Wonderful. Thank you for that.
And with me working at RCN, I consider this not just, me being an employee for RCN, for my business. I want to close loans as much as you do because I'm a commissioned employee. If I don't close loans, if I don't close your loan, I don't make any money. So it's important to have like really great relationships with my correspondents and brokers and making sure that everyone knows as much information as I do. If I don't have the answer, I'm going to find out, I'm going to look it up. Okay, so this is our loan sizer. And usually when I have people first start sending loans to me, I'll have them fill out a pricing quote form. And I'm going to pull that up for you. And with the pricing quote form, it's going to give me all the information I need about your loan to get it priced out. And I also have an assistant, Marcel. So whenever you want something priced out and you don't have access to the loan sizer or you haven't worked with a loan sizer yet, you're going to fill out this pricing quote form. And it's going to tell me what kind of loan are we going to do? Are we going to do a 12-month fix and flip? And this is fillable. So you don't have to print this out. So as you're having a conversation with your borrower, you can fill out all this information. It's going to let me know everything I need about that particular loan. And kind of be careful because some of these fields are pertaining to certain products. So if you're dealing with a 30-year loan, you're going to make sure that you're going to put in, the income on the property, the taxes, and the insurance, because we're going to be looking at that debt coverage ratio. And when I do provide quotes, they're not going to be 100%, but we want to be close as possible. So when you are communicating with your borrower, what are the taxes? Do you know what the tax is? And most borrowers will say, I'm unsure. I don't know what the taxes are. I just pay my mortgage. I don't know. Or insurance. I'm like, have you started getting insurance quotes? And that can be a big deal sometimes, especially when you're dealing with debt coverage ratio loans. I'm working with a borrower right now. He's out of Tennessee, and he provided me an insurance policy that's nearly $3,000. And if the dwelling coverage is double the amount of his loan, he's got $150,000 loan, and he's got a $300,000 policy. $300,000 policy with a $3,000 premium. And I told him, this is how this is affecting your debt coverage ratio. So you need to find a lower policy. And that's something that I take a look at. And I think that's something brokers should be aware of as well, because a lot of times people will just call people and they'll just take what they can get.
Yep.
So definitely call around. I do have some referral partners that I can send you to, but it's always best for borrowers to kind of call around when it comes to insurance. Any questions?
Very good point. Very good point to help keep moving deals, keep the deals moving. Tell the borrower to shop around, or sometimes you got to shop for your borrower on the insurance. So don't waste too much of your own time. But if it's just if the debt service is off just by a couple points, man,
it makes a difference. It could be the difference between $10,000.
Yep.
Sometimes. So it's really important for borrowers to be aware of that. Insurance people are hustlers too. Like, I don't know how they make their money. It's like if they sell a bigger policy, for the borrower, you're having all these add-ons. And something else that I want to touch upon real quick about insurance before I move on is that we do look for 6 months rent coverage. So if we're looking for 6 months rent coverage, we're looking for 6 months of the higher of market rent or what the borrower's renting the property for. And sometimes, insurance agents will get the borrower in that way. Like, we're not looking for 100,000 coverage there. We're just looking for 6 months. So that's something to look at as well.
Right.
So going back to our other products, we also have Roundup Construction. I don't know how much volume you guys are getting with Roundup Construction. It's a new product for RCN. We're not really well known for it at all, so we're definitely trying to get more business in terms of Roundup Construction. The perfect borrower is a borrower that does have experience. If a borrower has zero experience with Roundup Construction, we're not going to entertain the loan. We don't care if they have great credit. We're just not going to entertain the loan. We've tried. They say there is an option to have zero experience, but it's just not getting approved. So if a borrower does have 3 rehab experiences, they're likely to get approved. So a minimum of 3 rehab experience and 1 Roundup Construction experience, we can get it approved. And the credit score is going to be 650 on that product. And the initial advance is going to really be dependent on the purchase price and the allocation of the loan to cost. So we'll go up to 90 loan to cost, but the bulk of that cost is going to be towards that build. So if a borrower's buying a very expensive piece of land, they might have to put up a lot of costs up front because RCN wants 100% of that rehab funded, that construction build cost funded.
Mm-hmm. On the construction, can someone go from a construction to your perm loan in one seamless loan, or is it 2 separate loans?
It'll be 2 separate loans.
Wonderful. That's 2 sets of origination right there.
It is. And if it's 2 sets of originations, 2 opportunities for your borrower to continue that relationship.
That's right. What's the seasoning requirement on your 30-year mortgage when someone wants to do like a BRRRR strategy, buy, rehab, rent, refinance? What's your seasoning on full cash out? Great
question. That is one of our most popular options right now. I do have a lot of borrowers that are rehabbing and then go straight into a 30-year loan. In terms of seasoning, if it's with us or anyone else, if you have a mortgage lien, it's 91 days. If it's owned free and clear, you did the rehab yourself, you didn't get a mortgage, it's going to be 6 months. But another option is if it's within that 90 days or if it's within that 6 months, it is owned free and clear, we can do something called a delayed purchase. So we'll take the purchase price and the rehab, we'll combine those 2 amounts together and we'll do 80%. So if it is a heavy rehab and they did allocate a lot of rehab on that project, sometimes it works to get that extra 80% on the total. But for the most part, people really are looking for that new as-is value to refinance on.
Right. Wonderful. When someone does the takeout with you on the refinance, does the property have to be occupied?
If it's a new rehab and they just completed the project, I'm working on several loans that there's no tenants yet. We're still waiting for tenants in. What we do like to see at the time of closing, you're going to have a lease.
Okay, by closing, they want the lease. Okay, gotcha.
Yeah, so
but they don't have to be moved in. That's wonderful.
With a lease that's pending. So like say they're closing on the 30th of the month and the lease doesn't start till the 1st, something like that, or even within a week or so, as long as we know that there is a lease and a borrower did provide a security deposit, we're fine.
That's wonderful. No, that's fantastic.
Okay, so this slide right here is just our basic bridge loan. 75 LTV for the purchase, 65 for the refinance, and 60% on cash out. And that's just a straight bridge if someone just wants to purchase a property. Whenever someone's doing a straight bridge, we want to know what's the exit strategies. Like, why are you just purchasing this property as a bridge? Are you going to refinance later, or are you going to sell it? Because it's got to make sense. So that's something that you need to really kind of talk to the borrower. Why would you want to close on a loan for a 12-month that doesn't need any rehab? There's really no equity in it. So we just kind of want to know why you're just doing a bridge. It's not something that we do very often, but that question pops up when someone's doing a bridge.
So when you say bridge, we'll cover bridge on multifamily property, apartment buildings. Do you guys do mixed use by chance?
We do mixed use, and I have to say, honestly, in the nearly 8 years I've been at RCN, I have not closed on one single mixed use, and I'll tell you why. It needs to be 51% residential. Also, the commercial space has to be collecting less rent than the residential spaces. So there's always something that's off balance when it comes to these mixed use products. But if you can sell me one, I'll try to help get you a loan on it. But it's been pretty tough.
Got it.
And also minimum loan amounts sometimes come into play, because a lot of times, you get these mixed use properties where there's a storefront and maybe 2 apartments above. Sometimes they're not in a great area where the value is there, because we're looking for a minimum 250 loan amount. And sometimes those properties just aren't worth it, because we're also going to be looking at price per door.
Okay. That's great, Kim. Well, hey, Kim, we're running out of time here, so I want to open it up to a Q&A for if Jeff has any questions at all. We got about 5 minutes, so let's just keep it nice and tight, and we'll finish on a high note.
So we basically come in as a referral partner and basically use the deal sheet which I didn't see, but I know what it is. Use that to kind of get our sheets.
I'm sorry, could you repeat that question?
I said, so when you first come in, if you're not doing 5 deals a month, you basically use the deal sheet to get a quote from you, or we can still use the pricing tool?
If you want to learn how to use the loan sizer, be my guest. I love it. I love it when people take the initiative and the independence to get their loans priced out. I'll definitely provide it to you. I'll also provide the training. And usually when I first work with a broker, we'll interact with a pricing quote sheet, and then we'll set up an appointment and we'll go over the loan sizer in detail so they feel comfortable with it. I also have a training team that trains people on the Bridge Loan Network. That is our lending platform that we use.
Okay.
I'm just going to kind of click on it so you guys have a view of Bridge Loan Network. Okay, so this is Bridge Loan Network. This is my portal. These are all my leads I need to work on today. So with Bridge Loan Network, you have access to our loans, to your loan platform, I should say your loan. So you'll have your own platform just like I have. And you'll also, if you're a correspondent, you'll also have your logo information built into the Bridge Loan Network. So when you're pricing out loans, this is our pricing tool. This is our loan calculator. So when you are pricing out your loans, you'll be able to print out a PDF of that information with your logo and provide it to your borrower.
Beautiful. Well, Kim, we are wrapping up here. So if you wouldn't mind telling us how the best way to contact you and the best way to submit a deal, that'd be appreciated. And we'll wrap up.
Absolutely. The best way to contact me is my email address. Yeah, my telephone number is 860-432-4896. So when I do send you guys documentation, a couple of things I will send to you is my pricing quote form. It's fillable. You don't have to print it out. So whenever you want to price anything out, send it to me. I'll also provide you my assistant's contact information, Marcel, because a lot of times I'll send them over to her. My price this out for me. And she'll also send me brokers emails as well in regards to the pricing. And then she'll send me the loan sizer and save it. So again, email, call me. I love phone calls. A lot of times during the day, I do spend a great amount of time on the phone. I do like appointments, especially if we're going to do a long call, but also feel free to call me anytime with questions.
Wonderful. Jeff, do you have any more questions before we split off?
No, we good.
All right, right on. Kim, I want to thank you so much. This recording is going to go up onto our platform, our mastermind. So if anybody has deals to broker and they want to use RCN, they'll jump into this training And if you want to do more trainings, we get a little bit more focused on a particular program. I encourage that we do that, so we can kind of get a little bit more depth to the RCM platform.
Awesome. Thank you so much.
All right. Thank you so much, Kim. Take care.
Bye-bye.